Joining me now is Mainstay Capital Management CEO, founder, and chief investment strategist, David Kudla. David, good to see you. Your reaction and how are you feeling about markets today?
Good to see you this morning, Maria. Actually, we feel very good after last week. We saw some of the rhetoric come down in this stalemate between the U.S. and China on tariffs, and we've seen that really just give some confidence to the financial markets, both the bond market and especially the stock market. We saw a bit of a reprieve, a rebound from the sell-off we've had this year.
So earlier, Jay Hatfield, who's with me this morning, says he's constructive on the market. Jay, jump in here.
Well, we think that, as we really heard in the last segment, that we're going to get some really good tariff news. I think that's critical. I think it's also critical, though, for the president to intervene in the reconciliation process and try to incorporate the tariffs. Because if you listen to your guests, they're not talking about the tariff revenue. And, $5 billion a day is roughly $1.5 trillion. So it'd be spectacular, both politically and for the economy, to eliminate taxes on the middle class. So that's even more upside. I think when this tax bill gets passed, it's going to be extremely positive for the market.
It's a good point to make because we're right here in the middle of earnings season and we're not looking at the whole picture necessarily. David, you've got 177 companies in the S&P 500 reporting earnings this week. Technology giants like Microsoft and Meta are out on Wednesday. Amazon and Apple are out on Thursday. You've got Dow components like Coca-Cola, Honeywell, Visa, McDonald's, Amgen, Chevron, all coming out with earnings this week. Healthcare companies, Eli Lilly, Pfizer, Biogen, Humana, and CVS. What's your reaction to what you've seen so far in the first quarter earnings season, David? And what are you expecting from the bulk of these numbers this week?
Well, we've been impressed with earnings for the first quarter. If you go back to March 30th, there was estimate of 7.2% earnings growth for first quarter S&P 500 companies. We're up to a blended rate. That means those have reported and expectations for those to come of 10.1% now. So a big improvement from where we started the quarter, and we think that that's important because of the impact of tariffs and what they'll have on earnings going forward. Earnings are still supposed to be pretty good this year, high single digits, and the key is, when we talk about the tariffs, is how they are approached, because there's concern about rising inflation, there's concern about what it means to jobs, and of course, what it means to the economy. So this is an important aspect. Even though this is a huge week for earnings, we're going to get PCE this week, we're going to get GDP for the first quarter. But what the real focus is on tariffs and how President Trump is approaching his tariff strategy, which the 6 companies per week is good. If anything, we'd like to, for market participants, we'd like to see that accelerated, because as uncertainty comes out of the markets and uncertainty because of tariffs, we see the markets do better. That's what we saw last week.
Yeah, the new idea from the U.S. Trade Representatives is that they're working on a reciprocal term sheet for 18 trading partners over 2 months. And as you said, 6 countries per week on a rolling basis. David, how are you allocating capital in the face of all of this right now?
Well, coming into the year and with the impact of potentially of tariffs on the economy, we have taken some money abroad, specifically to Europe, where we had better valuations, and we have a monetary policy that is more favorable fiscal spending there. There's going to be fiscal stimulus versus here, where we're going to have a fiscal austerity measure in a form of what's happening with cutting back on government workers, cutting back on government spending. The right thing to do long term for sure, but has an impact on the markets in the short term. And so there we have diversified tactically, and we've also increased our gold positions for a hedge in the portfolio. We've seen gold pull back here lately, but central buying is at a record pace, so we think that continues. In the U.S., I don't think people should give up on mega cap stocks. They still are the major earnings contributors.
Yeah, it's a great point that you make in terms of the earnings period. so far, you haven't seen a significant number of companies say, I'm not going to give any guidance, but you had a couple. Right? I mean, you know, look at FedEx, look at Nike, look at a couple of others who said, we don't have the clarity to actually give you guidance on 25. Does that concern you? Do you think we'll see more of that with this bulk of companies reporting this week?
Yeah, that's really the concern. You know, we may have come past peak uncertainty on tariffs. There's a plan, and I think the plan in choosing the right country to get a good, if you will, pattern agreement. And it's the analogy is the UAW with the Detroit 3 automakers. They pick one target, they have a pattern agreement, and then try to employ that with both the other companies. If President Trump and Scott Bessent use that approach here to get a real good deal and with these first companies that others will follow, this can go quite well.
Okay, we will be watching all of that. David, good to see you. Thanks so much for joining us.
Thank you,
David
Maria.
Kudla. Quick break, and then California Governor